What if your mortgage lasted half a century? Donald Trump's proposed 50-year mortgage aims to make housing more affordable, but could it actually do the opposite? What do you guys think?
I'll tell you what I think. When I first heard of a 50-year mortgage, I immediately thought on my investment properties, I would definitely want to refinance my investment properties, at least a lot of them on 50-year mortgages, just to increase the cash flow. Now, I think Trump is aiming at potential first-time home buyers or new home buyers, and the 50-year mortgage for a home buyer, I think it's a completely different story. It doesn't change the payment that much when you're talking about, a $400,000 loan. But if this 50-year mortgage was available as an option, not mandated, but as an option on an investor loan, I think a lot of investors would take advantage of a 50-year mortgage.
Yeah, that's a good point. I think that, most bank loans are 25-year AMs, right? And if you get, yeah, right, for commercial. And I'm looking at refinancing a 150-unit apartment complex on a 30-year AM. And that makes you're getting it because that's Fannie Mae, right? It's Fannie or Freddie back. That is a big move for me, right? Going from a 30-year AM, and generally the rates are better. I would bet that this is for first-time home buyers, or not. I may take a step back, not first-time home buyers. I would bet this would be for owner-occupied, but I bet you would have the same requirements, or you had to live in the property for a year, and then you can rent it out. And that's a big deal. I think that could be. That lowers the payments. That can move the needle substantially.
It doesn't lower the payment that much for a small loan amount, and people are up in arms about this. I'm seeing people in line be like, no, this is trapping someone for, 50 years. But I don't think
no one's putting a gun to your head and making you do that. It's an option.
That's the piece that no one's talking about. You said it right there. An option. You can actually get 15-year, 20-year, and 30-year mortgages today. Those are available. Nobody's saying we're getting
available.
Yeah, no one's saying we're getting rid of a 30-year mortgage and
we're being a fucking victim.
A 50-year mortgage.
We're being a victim.
No, I agree. So the 50-year mortgage, so it's interesting. I was looking at the math. $1 million home at 6.25%. I don't know. I just ran that randomly, but that's about $600. So $1 million home. So 30-year to 50-year.
That's material.
That's at 6.25. So as the interest rate goes lower, it'll adjust accordingly. Now you think about it in a higher interest rate environment, that's going to be a bigger swing, right? Because that'll affect it. But what's that?
Here's my argument about this. And I didn't want to get back to the FDR stuff when the 30-year mortgage hit, because there's some stats that we have on this that surprise me. Don't you think that if you go to a 50-year mortgage, in that example, Mitch, and now it's a $600 a month savings, people are just going to back into higher prices? The prices, I think it's going to drive prices up, and then it's just going to settle back. Because they're trying to solve affordability for these people.
They could, but also you think about prices are really anchored on 30-year mortgage. So you could be anchored on 30-year mortgage. That anchors your price via the supply and the demand. But then people go 50 and they actually win because they've got a lesser payment. So I think a lot of people are anchored on the 30-year mortgage,
for the short term, and then it'll eventually get anchored on the 50-year, right?
Could be.
Well, you forget there used to not be mortgages, and then there was 3 to 5 year mortgages, that was common, and then FDR creates this 30-year, I don't think we can give him all the credit, but a 30-year mortgage for the same reason, right? To try to create some level of affordability. And I'm sure people complained about all the interest they were going to pay over 30 years. And you hear people now complaining about all the interest you're going to pay over 50 years. And that's where I really think the difference between, is this for a homeowner or will this be an opportunity for investors?
I think it's going to be homeowner first, and then we might see it layer into Fannie Freddie, for example. Fannie Freddie right now, which is agency debt, you can get 30-year. So does that affect Fannie Freddie at some point? And we could go do takeouts at 50-year? Maybe, but I don't, today we have 25-year with most regional banks or smaller commercial banks. So I don't know that they're just going to go to 50. I could see Fannie Freddie adjusting that.
Most people don't keep the same loan for 30 years anyway, and they're sure as hell probably not going to keep the same loan for 50 years. People refinance all the time. I don't have the numbers in front of me, but I want to say it's every 5 years, 6 years, something, people tend to refinance into a new loan anyway. So it kind of starts the amortization clock.
Don't you think that the rates will be a little higher for those notes? Because I know you can get a 15-year loan and get a rate premium right now over 30. So a 50-year, it seems like maybe it wouldn't be sick. In that case, let's say a 30-year rate's 5.5. Hopefully it gets down to that again. And then, but if I'm going to go 50, I'm going to pay a 50 basis point premium or a 75 basis point premium, because the argument is that the lenders make more money over the long term, but I think the lenders lose because the time value of money. $1 today in interest is worth way more than $1 in 50 years, or 45 years in interest. So I think you're going to get a rate.
Travis, Mitch, is this a trap? Is this trapping people in? Is this trapping the average person that wants to buy a home into this 50-year loan? The American dream used to be buy a house, pay it off. And we've talked about this on past shows. Like, the average person often doesn't pay their home off, or if they do, they die like before or soon after, and they never get to realize this free and clear home anyway. And I just don't know if I believe that even the 30-year fixed mortgage really is the American dream, nor does paying off a home always make the most financial sense. And then to speak on affordability, this will absolutely, I'm not against the 50-year mortgage because I think people should have options. So for give a 10-year, a 20-year, a 30-year, a 40-year, 50-year, I would take a 100-year mortgage on some of my properties and increase that cash flow. But to the average home buyer and say single family owner occupied, this will, I think, drastically, if the 50-year mortgage becomes the norm, it will increase the value of properties. It will make housing way less affordable. You'll have people, again, fighting and outbidding each other to buy a property. It'll make it unaffordable for a new home buyer.
Well, if you look at just the extremes of this, right? And let's just say tomorrow we introduce 1,000-year mortgage. Okay, you can pay over 1,000 years.
I'll do it.
I'm just saying super, super extreme for homeowners coming into the market. You're going to see prices go up in a massive way because people are like, oh, well, I can pay basically nothing for this home. Prices adjust way up. So incrementally, yes, I think you're going to have the prices go up. Now, is it a trap? I think that people need to take accountability. They need to understand the financials. Go look at the financial calculator, see how much principal you're paying down. In other words, that's like saying they put a casino down my road and they trap me. Well, fucking stop going and gambling. You got to figure out, there's got to be some sense of accountability. And if you're going to get yourself into a 50-year mortgage, go look at an amortization schedule and be comfortable with that.
Well, that was the same thing with back in the housing crisis, the ARMs. People are they're like, oh, it's not fair that I used my pen and signed this contract to pay this.
Yeah,
this mortgage.
That's the exact first thing I thought. You had all these people bitching about these shitty loans and the housing market just going completely, ass backwards in 2008. And I was thinking the same thing when you said that. I'm like, nobody made you buy this home in 03, 04, or 05.
Just like student loans, no one made you go into $200,000 in student debt to get a gender studies degree or whatever. No one made you do that. And you're working at Starbucks.
You're losing and you overbought by 3x just because the bank said you could, afford a $5,000 mortgage, but you're bringing home $2,000 a month, but you bought the house anyway. And now you're complaining that the bank gave you a bad loan. This is where you have to get educated. You have to, and a lot of this is basic fucking math. It doesn't matter if it's a 20-year, 30-year, 40-year, 50-year.
No, just ChatGPT it. What will my input payment? I mean, seriously, at the end of the day, this is a bigger problem. This isn't, okay, we'll get back to the 50-year mortgage. I'll get back to the tactics.
It's an option.
I think prices will go up. I think it goes back to this sort of mental state of mind in this country where nobody takes accountability. It's the government's fault. It's your fault. It's corporate America's fault. And that's why we're here. Take control, take some accountability, and achieve financial freedom through cash flow real estate. But I will tell you, I do believe that people that own homes are going to win because the value of their houses are going to go way up. I think that, Mitch, like you said, there might be a honeymoon period where prices are anchored on the 30-year, but that will eventually become the 50-year, right? And I guess that leads to another debate. Is homeownership a right? Back before FDR did this, only the wealthy owned homes. If you wanted to finance a home, it was interest only 5 years and then a balloon, right? Before the 30-year mortgage. But then there was this sort of mindset that everybody should own a home. It's the American right. You should own a home. But there's guys like Grant Cardone that are don't own a home, or Kiyosaki that says your home is your biggest liability. That's bullshit. Go rent liabilities and buy assets. So I don't know. I don't have.
Yeah. Well, I think it's a right to have the option to own a home. Like, in other words, we shouldn't go to any American, no matter color, sexual orientation, anything, and be like, oh, you can't own a home. That'd be crazy. So so everybody has the right to own a home, but is buying a home the right thing for everybody? I don't know that it is. Now, for me, I diverge with Grant Cardone and Kiyosaki and owning a home. Here's the reason. I could have paid the same amount of rent for my home today as I pay for my mortgage today, and I have like $600,000 in equity or more. So I do. And here's the other thing too: is not everybody's going to go out and buy the right equities and go buy the right real estate and all these things. And when you look at the average homeowner over 30 years versus the average renter over 30 years, especially for those who are not investing in alternative assets, they're in a much, much better position. So I'm not sure that I totally agree with Grant Cardone and Kiyosaki's advice on that. Now, I think they're coming from an angle where their money and their time is used for much bigger, better things, right? So I understand that. But for the average person, I think buying a home is much more advantageous than renting a home. That's just
that was before inflation was decimating the middle class. So if you're a 30-year renter, 50-year renter, and you never own a home, I agree. And maybe that's great. You get on a 50-year mortgage, you set your rate for 30 years. And you win. Yeah, I don't know. I don't know.
But I also think like home ownership, like I agree with what you're saying, Mitch, but I also understand why guys like Grant Cardone, Robert Kiyosaki, they own like your primary resident is not an asset, it's a liability. It's actually costing you to live there, right? But they're also deploying that capital into real estate deals. So for the average person,
yeah, that's right.
Yeah, I think the average person, it comes down to like, does it make financial sense for you? If you're going to choose to rent instead of buy, and because it's more affordable to rent than buy, which that can change over the years, what are you doing with the excess cash? Are you deploying that into something that's going to put money in your pocket? And when I say a trap, like I even think about the 30-year fix, right? Like for a lot of people, they're putting 40% of their income into a house with this dream that'll be paid off one day. But I've said time and time again, a lot of people never pay off their house. They refinance, which is fine, and they pull cash out, and then they do stupid shit with the money that they pull out. That's what a lot of people do when they refinance, a cash out refinance. They get a new loan, they pull money out, and they go buy a bunch of doodads instead of reinvesting that money into something that's going to put more capital in their pocket, or reinvest it into an investment property, or get some kind of return on their capital. When interest rates were low, if you refinanced, pulled cash out, and deployed that capital into something that's going to get you a greater return than the debt service, then you're winning. But if you go and pull money out, even at low interest, and you're buying new cars and 12 TVs and whatever the heck people are buying with this money they pull out, well, now you just put yourself in a worse financial position, and that equity you've built on the home, the home that you have owned, you basically have done nothing valuable to better your life with, other than just spend money on shit you don't need.
Well, here's a question for you. You got a gun to your head. You got to say yes or no with no qualifications. Is a 50-year mortgage on an owner, basically take the exact parameters for a 30-year mortgage, which is, hey, you have to be owner occupied. You have to live in it for a year. I mean, there's some Dodd-Frank protections and all that shit because people were stupid and nobody took accountability. Same exact thing. Do you support a 50-year mortgage, or do you not support a 50-year mortgage? Mitch.
I'm going to say I support it. The reason is I think that more options is better. So more options, it frees up liquidity. Yes, we could see prices go up and down, but like if you look back in the day when we didn't have the option for financing homes, it was really hard to buy homes, right? So then you go to extreme and have a 50-year, 100-year, whatever. It allows more people to get into the game, and maybe they're not building as much equity as fast, but also we're forgetting about the hedge to inflation, right? Like homes go up traditionally as the dollar depreciates. So I think you're allowing more and more people into the marketplace. There's more options. And I think when we have more options when it comes to financials, the better we are. So I'm going to say yes.
Gabe. Gun to my head, I don't think it's as easy as yes or no. So maybe I'm dead. But I think gun to my head, 50 year yes or no. I'm going to say yes as an option, not to replace the 30 year, but absolutely yes as an option. I want more Americans to have more options. I'm a believer in freedom and autonomy. And this is just one example of like, if you have the ability to have more options, get educated and then do what is right for you and your situation. And I would think that the average American would do the same thing, whether a 50-year, a 30-year, a 15-year is better for their personal financial situation, then they can make an educated choice accordingly.
Yeah, I would agree. Yeah, 100%. 50-year mortgages going to allow people to get into home ownership.
Did you ask Travis his opinion, Mitch? I did not ask Travis.
I said, well, we have to care, Gabe. We have to act like we care. Okay.
Oh, okay, Travis, gun to your head. 50-year
you
mortgage.
Guys pay my wives to act like you're my friend, so you have to ask what I care about.
That's what you did. Yeah. Anyway.
Okay. Yeah. Travis, 50-year mortgage. Yes or no?
Yeah. Same reasons for you. I think people can, if it's proven, if you could get into home ownership, it puts you in a better position. You couple that with inflation, and I think maybe that's where Trump's going with this, saying you're looking at what inflation is doing to the middle class and the renter economy, and it's destroying them. And so if you can lock in a rate at 50 years, your equity goes slower. You're probably going to pay a rate premium, all of the things, but you can get into a home. Yes, selfishly, I like it because I'm a real estate investor and I'm a cash flow real estate investor just like you guys. And we use cash flow to be free and to have time freedom and do whatever the hell we want in our life. And having 50-year mortgage options, or someone starting out that bought a house, lived in it on a 50-year mortgage, held it, bought another house, did the same thing over and over again, they can build a lot of wealth for themselves. So yeah, I support it 100%.
Even if, you look at like the extreme, you say, look, let's just say there's a mortgage that's interest only for 100 years. There's no debt pay down at all. Even that would have been profitable over the last 20, 30, 50, 100 years because it's an inflation hedge. So let's say you buy it, you put in roommates or whatever, or you rent it or what, right? Someone covers your interest payments. You would have still made money on equity because it's an inflation hedge. Our dollar has lost 95% of its value over the last 100 years or so. And I don't think it's going to stop because we have a government on the left and the right that basically runs at a deficit and prints the delta. So like, I think that like getting in the game, getting a house hack first, whatever, a duplex, like we talk about this in our book, like getting in the game and being on that other side is like the first step, and 50-year option could give people, maybe an easier way to do that.
Yeah, your interest-only example is a great example of like cash flow first, freedom forever. I bought a commercial property with several multifamily properties attached, and I negotiated a seller finance deal, and it was 15 years interest only. And even the seller was like, why wouldn't you want to pay the principal down? But I did the math. Now, the property today with no principal pay down is worth more than double what I paid for it 10 years ago. So I've created like, all this equity in a property, but my cash flow, especially during those first several years, like I really wanted that cash flow. And so I was fine doing it. I bought right. I got a low money down. I got a great price. I got good terms, but I decided to go with a 15-year interest only because my goal of that particular property wasn't to pay it down. It was to optimize it, increase the cash flow. And then I was able to create a ton of equity in that property without paying down the property itself. And so every individual, has a different scenario with their investment philosophy and what their goal is with that particular home.
Well, I'm biased, obviously. We're cash flow investors. And I think everybody should look at real estate assets through the lens of cash flow, because equity, you can't eat it. It's a someday number. If it's on paper, you might not ever experience that because you might die. Cash flow gives you the freedom today, and it gives you the choices to do what you want today. Last question for you. Is this going to affect the renter market, though? We own rental properties. If all of a sudden you have renters that can now go buy homes, they're not going to rent your properties for you. Or maybe more specifically, I should say, maybe more nicer apartments, A-class apartments in nice areas where people want to be homeowners, but they can.
It won't affect the rental market at all, because when you're talking first-time home buyers or let's say a starter home, which even starter homes are getting more and more unaffordable, that delta between a 30-year fixed mortgage and that payment to a 50 years is actually pretty minimal when you're talking first-time home buyers. So I don't think you're going to see a bunch of renters just jump out of their rental property to go and buy that same home on a 50-year mortgage, because that monthly payment on, say, a $400,000 home, $300,000 home is actually pretty minimal.
I was going to say too, when you look at like the psychology of action, just because there's new legislation or new, a new loan term doesn't change the action in most people's minds. So if you're a renter, you're a renter. If you're a buyer, you're a buyer. I think it's going to give buyers more options. Maybe some renters come off the bench, but the fact is most renters aren't even going to know it exists, because if they're in the renting mindset, they're not reading the news about a 50-year mortgage.
I will also say that I feel like home ownership is good for the country. I think the more people that own homes, they're anchored, they're stable, their families are stable, they're not moving. They're also not at risk of a landlord, selling the building and cranking rents up, or maybe, or just demolishing the building and repurposing it or whatever the case is. Like it gives them some stability, which I think is really good for the American family.
I do too. You're a stakeholder. You've got dirt. You've got a house. You've got some sense of security. You have slow equity growing up or, going up. So I do too. I think homeownership is a good thing, and this could help people get in the game.
All right, I'm done. Let's end this. Go out there and buy some cash flow real estate. Quit fucking around. Buy some real estate on a 30-year mortgage, on a 50-year mortgage, whatever's going to put cash flow in your pocket to live your best life.